Hey guys, if you like this video, click like, subscribe to our channel, and hit that little bell for notifications. Welcome to your monthly market report for September of 2022. My name is Josh Burnett, and today I'm going to walk you through three of the most important topics happening right now in the housing market. We're going to be going over mortgage rate projections from the experts. We're going to talk about home prices, and then we'll wrap up with affordability, something that's definitely top of mind for everybody right now. So I'm going to begin today with mortgage rate projections from the experts. And we can all probably agree that this year in the housing market has truly been defined by rising mortgage rates. So this is a look at the Freddie Mac 30-year fixed rate going all the way back to January of 2022. And if you follow along with us, you've definitely seen this before, but what it shows is how much mortgage rates really rose from the beginning of the year all the way into mid to late June-ish. And then since then, you can see that there's been a lot of volatility or fluctuation in mortgage rates over the past few months. So why is that? Well, you've heard us say that inflation is the enemy of long-term interest rates. And that's certainly something that we're following right now. We know that the Federal Reserve doesn't call mortgage rates, but they're certainly making moves right now to try to ease inflation. And when that happens, mortgage rates tend to respond. So we're watching all of the different economic factors that impact mortgage rates and how that's playing out over time. It's certainly something that we're keeping our eyes on. And one thing we can do in the meantime is we can turn to what the experts have to say. So what are the projections going forward? Everybody wants to know, where are mortgage rates headed? Well, if we look at these projections from Freddie Mac, Fannie Mae, the MBA, and NAR, this is the latest data that we have as of August of this year. And if we average all of their projections together over the next 4 quarters, we can see over in that right-hand column is that mortgage rates are projected to essentially stabilize over the next year. So we're really looking at this, trying to figure out what's going to happen with mortgage rates. This is a great place to look for information and maybe a look to the experts' feelings that the Federal Reserve is going to get inflation under control. If that's the case, then mortgage rates, we do hope, will stabilize at that point. That's certainly what we're looking forward to see, and hope that the experts are correct in these projections as we continue to watch all of the economic drivers around us. And I think that as we look at this, low to mid 5s is the projections, maybe even by next year at this time, dipping into the high 4% range. That could bring a lot of predictability for buyers, and I think that this next quote really says that well. This is from Lisa Sturdivant, a housing market economist that we follow, and she says, after the end of summer lull and as mortgage rates stabilize, we may see a return of buyers and a relatively strong fall housing market. So obviously that could be great news. If mortgage rates do stabilize, we may see more buyers coming back into the market. We certainly know that rising mortgage rates have caused many buyers to step out of the home buying process or home selling process. But with these projections at hand, should they actually play out, we could see stabilization in that. A very strong fall housing market is certainly something that we're keeping our eyes on, and we're watching to see what experts say as well. So another topic that's on everyone's mind is home price appreciation. And a recent survey of about 400 agents over the last month asked what's the number one question that buyers and sellers are asking right now. And one of those top ones that definitely rose to the top of that list was what's happening with home prices. Where are home prices heading? So what am I going to do today is break down today's home price appreciation, because honestly, it's really a complicated topic, but let's see if we can clear up the confusion. So today I'm going to do my best to explain it, because what we're hearing right now is home prices are appreciating. But we're also talking about deceleration, and then we're seeing in some markets that sellers are bringing their list price down. So there's a lot of confusing information out there, and I want to do my best to share this information with you. So what we're going to do is start with this quote from Mark Zandi. He's the chief economist at Moody's Analytics, and he says, "I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country." So what does that mean? Well, on average, nationally, we project that home prices are going to continue to rise. And we're seeing that in expert projections, but at the same time, we also know that there are some overheated markets throughout the country especially out on the West Coast where there will likely be price declines. And you might even be seeing this in our local market here now. So what I want to do today is bring to context this and show how home price appreciation is still expected going forward based on today's buyer demand and low inventory. But what does that mean in the grand scheme of things? And I think this chart, this graph, you've probably seen us use it before, really helps to articulate this. It says that appreciation is slowing, not depreciating. And that's where the word deceleration comes into play. We've been using that term a lot lately. So let me walk you through this. This is the percent year over year of home price increases from 2022 so far. And this is the data from CoreLogic. The latest data was just released. And so what you can see here is that year over year, January, February, and March, home prices were still accelerating at a pretty rapid pace, record-breaking home price appreciation at the beginning of this year. But what's happened since then? We've come off that high of 20% year over year home price appreciation, and that's starting to cool off. So we can see that if we look at May, June, and July. That's the deceleration in prices. So what this means is year over year, July, let's say July of this year compared to July of last year, home prices were still 15.8% higher on the national average compared to last year. But that's a slower pace than the high of over 20% that we saw at the beginning of this year compared to last year. So the pace of appreciation is slowing. That is deceleration. It's not depreciation where we would have negative price growth. But this is where it gets confusing in some markets. We're also seeing that some homeowners are dropping their list price. So let's say that there was a house that would have sold for 4 months ago for $400,000. Well, now that home might only sell for $370,000. In that case, it might feel like depreciation, and that's because home prices are actually measured in a couple different ways. So year over year, you're seeing here is continued appreciation at a slower pace, but month over month, we're certainly keeping our eye on that because that's what buyers and sellers are looking at. That's where they're feeling if they're thinking prices are going down, and so we're going to keep our eye on this home price appreciation. We still know that there's plenty of buyers out there. There's still low inventory. We know that prices are projected to continue rising just at a slower pace. So we're going to keep our eyes on all of this, and truthfully what this means is that a year ago the listing price might have been the floor of the negotiation. You could list a home, you could maybe list it a little higher than what you thought it was worth, and the buyers would still come in, multiple offers, bidding wars, bid the price up, and that list price was really the floor of that negotiation. Well, what we're seeing happen now as the market starts to shift is that the list price is probably more of the ceiling of the negotiation. Buyers are starting to have a little bit more negotiating power, and we're seeing changes month over month, and that's what we're keeping our eyes on. So home price appreciation is slowing, not depreciating on an annual basis. And I think this quote from CoreLogic really helps articulate that. It says, annual home price growth slowed for the third consecutive month in July, but remained historically elevated at 15.8%. That's the graph that we just showed you. As 30-year fixed mortgage rates neared 6% this summer, some prospective home buyers pulled back, helping ease overheated and unstable price growth. But we know that the past 2 years have been an anomaly. The price growth over the past year in particular was just unsustainable price growth. So looking ahead, CoreLogic expects to see a more balanced housing market with year-over-year appreciation, slowing to 3.8% by July of 2023. So by July of next year, they're projecting that home prices will still be appreciating in value, just at a much slower pace. That's deceleration continuing, and is much more in line with what we're seeing from the Home Price Expectation Survey and what they're saying for continued price growth. Higher this year and a little bit more towards a normal range next year and beyond. So leading up to the pandemic, the average typical home price appreciation over a typical year was about 3.8%. So that's what experts are starting to see as they look forward. However, I also want to walk you through is how many experts raise their home price forecast for this year. So it's very typical. What you see here is these are January forecasts for 2022 home price appreciation. That's what you see in the middle column there, compared to the latest forecast, and those are on the right-hand column. So what usually happens as you start a calendar year is the experts project out what do we think home price appreciation is going to be this year. They're looking at buyer demand, they're looking at supply, inventory, all of the different things that drive home price growth, and then they project out for the entire year. Well, as the year goes by, experts tend to reforecast based on what's actually happening in the market. And so that's what you can see here is that this year, experts, even though prices were decelerating, reprojected a higher home price appreciation for 2022. And that's what we're seeing here. So we're hearing all these different terms. We're seeing these home price forecasts. Trying to make sense of all of it can be really confusing. But what experts really saw at the beginning of this year was that they thought that there was going to be more inventory coming to the market, and that just didn't happen. Mortgage rates haven't risen as much as they had to soften buyer demand, and so the year progressed and they realized the inventory is still pretty low. Buyer demand is softening. So what's going to happen here? They reforecast up, and that's the green column that is showing you from each of those experts. So what does this look like for 2022? We bring this graph to you often to show you the latest home price projections for the year, and the average of all 7 forecasts that we follow is showing 11.3% annual appreciation for 2022. Now, what we have to remember is that the majority of home price appreciation happened earlier this year. It happened at the beginning of the year, and we're seeing that softening, but experts still projecting by the end of the year 11.3% home price appreciation for 2022. So why is that? Well, it's because inventory is still historically low. If we look at this data from calculated risk, this helps us compare where we are today versus where we were over the past few years. So if you look at that blue bar on the left, you can see that inventory is 26.3% higher than it was the week ending September 2nd of last year. So year over year comparison for the last week of August and then the first couple days of September, 26.3% more inventory. So that's creating more opportunities for buyers. It's helped softening of home prices for sure. But compared to the same week in 2020, inventory is still down 5.4%. And compared to 2019, prior to the pandemic, inventory is still historically down 42.2% from where we saw it the same week in 2019. So that's what's continuing to drive this upward pressure on home prices. Inventory is still low. Buyers are still in the market. So yeah, we've seen a softening, a cooling, a slowing, but home prices are projected to continue to rise, primarily based on this inventory data as well. So really, really important to be able to get this information out to all of our buyers and our sellers so they understand where mortgage rates are projected to go. What's happening with home prices, working with you as your trusted expert in this process to make sure that you have data and facts on what's happening today. And of course, anytime we're talking about mortgage rates and prices, we know that that impacts affordability as well. So let's talk for just a minute about affordability. It's a topic that I think comes up a lot in a lot of conversations, mainly right now in the media. People are saying, are houses even affordable right now? And I want to break down affordability from a couple different angles in reports and things that we use so many times in our monthly market report and give you a look at that. But more importantly, to communicate this to the clients that I'm working with. So if we start here, let's start with the first place, the Housing Affordability Index that NAR releases. They release this every month, so let's take a look. If you're familiar with our monthly market report and you followed this and you listened, you've seen this before. But housing affordability right now is lower than it has been going all the way back to the 1990s. This is a look at housing affordability. The way you read this is the higher the bar is, the more affordable a home is. And right now, you can see the red bar below the years that we showed here, going all the way back to the 90s. And what stands out are the years after the housing crisis where distressed properties dominated the market. The high of that market, the Housing Affordability Index, read 197. Right now, we're at 98.5. So the way you could read this is a 100 reading of the Housing Affordability Index is really an even reading. It means the average individual, average household can afford 100% of the average mortgage payment. So it's even, right? You make enough money to afford an average home, and that's even affordability, and we've got a lot of cover from interest rates over the last several years and seeing great affordability. Well, right now, the average household can afford 98.5% of the average mortgage payment. So it's less affordable. You can maybe even say it's unaffordable. You may see that in some places, and that's where that comes from. But certainly, this is not an apocalyptic scenario by any means in a housing affordability. Now, it's based upon three things. It's based upon the prices of homes, interest rates, and wages. That's how they come up with the Housing Affordability Index. So based on where this is heading in the future, what do you believe about prices, interest rates, and wages in this country? That will help you give expert advice in this affordability category because a lot of people are asking those questions. If we continue on this, NAR came out with this very interesting point about mortgage payments. Compared to 1 year ago, the monthly mortgage payment rose to $1,944 from $1,265. That's an increase of 53.7%. So houses are less affordable, mortgage payments have gone up. If we look at this graphically, this is what it looks back, going all the way back to June. The most recent information that we have in the statement that I just gave you from NAR. No doubt, as people have gone through the pandemic, the meaning of home has changed. And basically what they've said, you know what, we're willing to pay more for what we want, and we're seeing that right now in the rising mortgage payments across the country. Now, another thing that we want to look at when we start to break down affordability and understand that what we want to look at is what the average mortgage payment or income committed to a mortgage payment. And right now that sits at about 25.4%. So that assumes a 30-year fixed rate with 20% down payment on a median priced home with median income. So go back to the affordability equation. The median income, the median priced home, somebody is dedicating 25.4% of their income to a housing payment. Why is that important? Well, if we look at this, 25% is typically the recommended. We're going slightly above that. So again, I'm going to go back. This is not an apocalyptic scenario by any means, but if you hear that word affordability coming out, you can give some context to that and what that means. As you think about housing, one of the greatest benefits of buying a home versus renting is you benefit from a refinance as the rates dip in certain times. Now, I'm certainly not suggesting that somebody should buy a home just based on the opportunity of being able to refinance it later on, but it is something that I want to remind people that you can buy now, and as prices rise, which is certainly projected, and if there's an opportunity to refinance, you can do that down the road, and that is something that's very, very important to those that own a home. It's all about incomes and qualifying incomes and looking at what people are making, what the price of the home is, and certainly what the interest rate is. And that helps us break that down. If we further break this down, if you look at the median household income versus qualifying income, here's what becomes very, very clear. This is not the same across the country. If you go look at the West Coast, for example, the qualifying income, what you need to make to buy a home, is certainly significantly higher than what the median income is. If you read this, in the West are less affordable. In the South, they're neck and neck. In the Midwest, median income is higher than the qualifying income. So bringing in our local information and what's happening in our market is critical, absolutely critical in this conversation. But being able to be educated and bring truth about affordability is really what we have to do. And if you look at this graphic, here in the U.S., it's sort of neck and neck. The median income in this country is $91,952 versus qualifying income of $93,312. So certainly the rise in the interest rates has lessened the buying power of consumers relative to housing across the country. That's absolutely something that we want to stay on top of. So what do you do in a scenario like this? Well, I want to wrap up with a couple things and give you a couple resources of what you can do. 3 things that I think you can do right now if maybe you're struggling with affordability. First, you can expand your search area and your criteria. So if you were looking at buying a home near the center of a city or in a town, maybe you need to look a little bit further out or look at where things might be more affordable than in the area that was your first choice. So that's one thing you can do, is change our search criteria. The second thing we can do is explore alternative financing. These are products that are available in the market. I've got a great lender partner that I work with that can help you with this. and it's how you can manage the debt based on what we've seen in rising prices and rising rates. I think it's critically important that we explore all those alternative financing options. And again, this is in no way telling people go out and buy something with the intent of refinancing it, just like I said earlier, but it's about understanding what's important to you and how you structure that debt. So we're really just asking, what are the options out there that might help you be able to do this in a more affordable way? And lastly, the third thing you can do is look for grants in your area, gift funds, use resources like downpaymentresource.com. It's a great organization. You can go in there and say, what are the down payment resources? What are the resources available in my community for those that are looking to buy? And those are arranged by a number of different ways, but a lot of times think about a first-time home buyer down payment, a credit or a grant or something like that. But look at those options. Also, you can look for gift funds. Are there areas where people can use gift funds to get into a home and combat rising affordability? So I think that there are things that we can do, and we can give great advice in this, understanding this topic and just being educated on it. So I want to wrap up with this. Ali Wolf from Zonda said this: I think it's critically important with what we're talking about here with affordability. We're in a place where strategy discussions and planning are critically important to make sure we can thrive during these challenging times. We got to stay nimble, stay informed, and remember that housing is traditionally one of the first sectors to slow as the economy shifts, but it's also one of the first to rebound. We've done a lot of work on recession, and that topic continues to come up as we see the economy slowing, but staying informed and educated, like we give you in these monthly reports, is key. So I'm going to offer you this. We just got our buyer and seller guides prepared for the fall. I can mail you one. I can email it to you as well. I want to get these in the hands of people that may be saying, hey, we're thinking about putting our home on the market, or we're thinking about buying now that we've seen more inventory come about on the market. These guides can really answer a lot of those questions that you have. But what about all those people over the last couple of years that gave up their search because they felt like, hey, this is impossible? They said, we lost out on bidding wars, we lost out in a number of different ways. We want to be able to educate them and deliver to them what's happening in the market, and that's what our job is. And these buyer and seller guides do that. So we want to put those in the hands of people that we're working with. You can use them to guide you to make these informed decisions. So as a wrap up here, we've covered a ton of information today. Appreciate you investing the time to listen to our monthly market report each and every single month. Our goal is to give you what you need to make the most educated decisions in the market, and that's really our aim. So we'll see you back next month. Thanks for joining us. And as I always say, it's my job to give you enough information to make an informed decision.